We're going to do a brief video on GBPUSD. That's GBPUSD Analysis Today. And we've got a daily chart of the British pound versus the dollar. And in a minute, we're going to show you some algorithmically generated prices. Let's take a look and see what's going on here. You can see the pound relative to the 200-day moving average. We've been in a bear market since at least, let's go all the way back up here, at least September of 21. It's been flirting with a 200-day and finally broke hard around February of 22 in the spring of this year. And it's essentially broke really hard. You'll see that we're widening the gap between the 200-day and the price, which is not a good sign if you expect this currency to rally. And so what happened down here is we got too far away. We had some tremendous sell-offs down here in the last week and put in certainly what looks like a near-term bottom at the 1.035 level. Got a good sharp rally all the way up to the 20-day moving average, went through it just a little bit, but this is a short covering rally. Almost certainly you'll notice these rallies are much more moderated rallies here all the way through. But when you get these deep, hard sell-offs over a couple days, you're going to have a serious bounce, and that's all we're getting. We're just coming back up to, if you imaginarily put a trend line on here, we're just coming back up to trend line. This market's still in a deep bear market. Keep in mind, interest rates are always going to affect the currencies. That's probably the major determinant for exchange rates. And as long as the Fed keeps tightening in the United States, it's going to have major effects on the currencies across the board. But this is just nothing but a bear market rally. Admittedly, it's a huge one, and it's coming up off that psychological even level, the $1 level, or really close to it. But I expect this to sell back down probably to at least this 1.099 level, and I expect to see that probably within the next couple of weeks at the absolute most. You get a hard rally, you're probably going to get a sharp sell-off as well. And so we've had both, so this may go sideways. We had our sell-off first and then a sharp rally, so this may take a little bit more time, but I'm expecting it to come down to this 109.9 level within the next couple weeks. Let's take a look and see what RBAM research says about the GBPUSD. We put these out every morning before 7 a.m. They're out for today, the 4th. And for GBPUSD, it's got a short position at 1.125. We put these out for 1, 2, 5, 10, and 20-day hold periods. These are trading days. Basically, if you got in this column, the one-day column, get in today, get out. Worst case, before the market closes tomorrow at a loss, or take your profits as soon as you get them, and the same thing across the board. Let's go ahead and take a look and see what's going on. It's got a short at 1.125. And let's see. Short at 1.125. So it did not hit that. It did not hit that yet. Some of the other ones might be live, but it has not hit the 1 day. And for the other ones, we have to wait and see how they play out over the course. Yeah, it's hit some of these other ones, but we'll have to wait and see if they play out profitably over the course of their time periods. But for the 1 day, it has not hit that yet. That's what we've got for you today on the GBPUSD. You can get all of our entry prices, including 190 stocks, the major forex pairs, BTC crypto, and the most liquid futures contracts at rbamresearch.com. There's a link in the description below. No cost, no credit card required, and they're all updated before 7 a.m. Monday through Friday. If you like this video, please click the like button. If you want to subscribe, please do that as well. Keep in mind, all of our entry prices and all of our commentaries for entertainment purposes only. Can't use it for anything other than entertainment. You should always use your own analysis, and you definitely trade at your own risk.